investor. Here's the first take on the index. It is positive, 34 points in the green.
In fact, the morning has been a bit choppy. We started off much better than what the street was anticipating.
The markets have slipped into the red yet again. It has been very range-bound, right?
Neither here nor there. 18,290, 18,300 or so is where the Nifty is at. The high today has been made at 18,326, and which is very close to yesterday's high. Yesterday we got to about 18,344, just 20 points under it.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action and 5 headlines. I'm Sonia and here are all the top headlines for the day. We begin with yet another day of heavy volatility. Stocks indicate stock indices fluctuate between positive and negative territory. Banking, IT and pharma stocks see a mild pullback, but FMCG and real estate counters provide support. Sensex and the Nifty end with modest gains. Public sector banks dip on expectations of additional provisioning required under RBI's proposed expected credit loss plan. Private banks with healthy buffers are seen less affected. Nifty PSU Bank closes 1% in the red. Other PSU bank names like PNB, Union Bank, UCO Bank fall between 1 to 3%. Escorts slips over 1.5% on recording a one-time loss of over 24 crores in the fourth quarter. However, margins are a big beat. The company says domestic tractor market share 10% has dropped on a yearly basis. Apollo Tyres stumbles over 3.5% despite a good set of results. And Lupin gained over 0.5% on the back of a good fourth quarter. The pharma major reported 13% margins versus close to 7% for the same quarter last year. Shipping Corp also raised close to 6% on the back of a strong yearly growth, while Latent View slumped 10% on a quarter-on-quarter decline. Well, Aarti Industries slumped close to 9% after Nirmal Bang downgraded the stock to a sell rating, cut the target to 430 rupees per share, while Henderson Bank climbed close to 3% after UBS upgraded the stock to a buy. Well, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment. In Big Corporate Voices, we have Ashu Shingal, who's the MD of Mahanagar Gas. All right, straight to all the action from Dalal Street. Markets closed with modest gains amidst volatility, with the Nifty holding on to 18,300. A recovery in the last hour of trade helped the Nifty Bank gain 150 points. However, PSU banks remained under pressure along with IT and pharma stocks. Prashant is here with a wrap. Prashant.
Well, the market had Wall Street handoff, which was weak, and then it had two Qs, one local and one global, which kept things in check through the bulk of the session. And I'll get to those cues in just a bit. But towards the close, the market did pick up. We ended about 40, 50 points higher, almost at the high point of the day as compared to the low or somewhere in the middle. And same was the case with the Bank Nifty as well, where there was a little bit of up move, which did come through. Gainers were, once again, for the last 3 or 4 days, it's been a combination of financials, and today was no different. Henderson Bank, HDFC Life, Bajaj Finance, throw in a Power Grid and BPCL, and that makes up, the big gainers on the Nifty. Reliance has been participating and kind of throwing its weight behind these up moves over the last 3 days at least. On the downside, you had UPL, Dr. Reddy's and Hindalco, which were under pressure. Lots of gainers from the broader markets. Varun Beverages has been such a huge outperformer. It crossed the 1 lakh crore market cap today. Big move on volumes. SL Propack, EPL, Cyient was a big mover, Shipping Corporation, KEC, Finolex Pipe, Sobha, and many more participating on the upside. On the downside, the recent listing yesterday's Mankind Pharma pulled back a little bit, not much. Aarti Industries was a sharp cut, earnings downgrades there. On Latent View, markets did not like the numbers as well. We saw a sharp cut there as well. PSU stocks sold off yesterday, PSU banks particularly. Today was no different. And the rail infrastructure pack also continues to see profit booking. RVNL is a case and example. The two Qs I was talking about, later today, we get the exit polls from Karnataka. The voting, of course, was today. And the market will watch what that throws up. And out of US session, we have the CPI numbers for the month of April, which I think is the global mover for price action. Back to you.
Okay, thanks a lot, Prashant, for that. Well, in Market Opinion, Rana Gupta of Manulife Investment Management said that Indian markets have outperformed emerging markets. He also said that FIs are betting on India after seeing an improvement in the economy.
Indian markets are broadly in the range of 16,500 to broadly 18,500 for what's going to be nearly 2 years now. Indian markets have outperformed the rest of the emerging markets, even some of the global markets, since about beginning of April. Some of the FIs, they were a bit concerned on the current account, But I think the current account worries, whatever there were, now is also considerably diminished post we saw that tremendous service export numbers, right? So basically, I think the theme that we have been talking about for some time, that fiscal deficit coming down under control, current account deficit improving. So overall, in the economy, deficit is improving, and the savings deficits are improving. The deficits are going down, and the savings are improving. I think that theme is now playing out in data that might have catalyzed more investments from the FII investors into Indian markets.
Okay, on to the second headline now. Public sector banks were under pressure on expectations of additional provisioning required under RBI's proposed expected credit loss plan. The Nifty PSU bank index declined over 1.5%. Names like Union Bank, Canara Bank and SBI also closed with cuts. Abhishek is here with more on that. Abhishek, what are the brokerages making of this?
Well, PSU banks have come under focus after the ECL provision made by Canara Bank, and for which they have also highlighted in the con call. So Morgan Stanley has written a note where they say that ECL guidelines is still work in estimates, and it is tough to estimate the exact impact right now. However, they say that some banks have disclosed a potential impact of 4 to 5% of the loans, and the potential impact on the net worth could be anywhere between 5% to 20%. So relatively, they expect greater impact on Canara Bank and PNB. BOI, that is Bank of India, has weak asset quality. However, its provision coverage ratio is on the higher side and it is well capitalized as well. So they have downgraded Punjab National Bank to underweight from equal weight, while they prefer Bank of Baroda, Bank of India and SBI with better balance sheet. And they have also cut the target price on Bank of India as well as Canara Bank as well. We also have CLSA who has written a note. They say that the expected credit loss scare is not there for private banks which are well placed or better placed than their PSU counterparts. So for private banks, they estimate a release of the provisions of very little impact given the fact that private banks already have a provision buffer over there. So for, like in the case of ICICI Bank, it has a 13,000 crore rupees of contingent buffer which would augur well, and it is best placed over there. So for PSU banks, the ECL provision impact could be anywhere between 0.8% to 1.5% of the loans, and SBI and BOB, they expect that it will have a requirement of 1% of loans in terms of the provisioning that they need to make according to the ECL framework as and when it comes. Back to you.
All right, thanks a lot for that, Abhishek. Well, the third headline today, L&T slipped over 0.5% ahead of its earnings. The street is in fact expecting a strong showing from the company. It's expected anytime soon. If you look at it, the revenue growth of 12.5% is what the street is expecting. The EBITDA growth about 11.5%, and the margins could be stable around 12.2% for L&T. Now, the company could beat its guidance for FY23, and that's the expectation. The guidance was about 12 to 15% order inflows, and the company may beat that. The core margin guidance has been cut from 9.5% to 8.9%. Macquarie expects 47,500 crores of core orders, and the total order inflow is seen at about 63,300 crores. But in some earnings that came through today, Apollo Tyres stumbled close to 3% despite reporting a very strong set of numbers. There was a 400 basis points increase in margins for the fourth quarter for Apollo Tyres. Very strong double-digit growth in its revenues as well, and much higher than what the street was estimating. The fact that there are lower raw material costs as well as better operating leverage is what aided the numbers this time around, and brokerages are quite upbeat on the numbers for Apollo Tyres. Hence, that stock, of course, has had a really strong run in the last many weeks and months. So perhaps some profit taking is what we saw today. But Escorts, on the other hand, slipped close to 1% despite a good fourth quarter numbers. The net profits came in at over 180 crores and the margins came in at 10%, which was higher than what the street was estimating. However, the profitability was hit by a one-time loss, and the management commentary was a bit on the weaker side, and they've lost a bit of market share as well. Hence, the stock was under pressure by the end of trade. The EBITDA, core EBITDA, was down about 6.5%. But moving on in more earnings, Mahanagar Gas surged over 2.5% after reporting strong results yesterday. Managing Director Ashush Singhal said that they expect volume growth of 7% for FY24.
Volume-wise, we expect 5 to 6%, and if the year goes good, we may see 7 to 8% volume growth. Margins are expected to, if you see last 5-year trend also, only barring 1 year, we have been in the range of 8 to 10 rupees per kg. So that per SCM, sorry. So that is the trend we expect to take, right? This current financial year, we are around 9.5 rupees per SCM. So we expect that the margin should be in the same range, 9 to 10 rupees.
Okay, let's slip into a quick break, but do stay tuned in. We will come back in a jiffy with all the other top headlines. Welcome back. You're still watching Markets Today on CNBC TV18. Let's go to the rest of the headlines that we're tracking for you. The fourth headline today, Lupin is up by 1% after the company reported a better than estimated fourth quarter numbers. The pharma major's margins grew to 13% versus close to 7% in the same quarter last fiscal. Ekta joins in with more on that. Ekta.
Thanks for that. Well, yes, Lupin has really reacted to the management commentary coming in post the numbers. So first the numbers, the revenue was up around 14% odd. A lot of the markets did well this time. So this was better than what the street was estimating. The street was estimating a growth of around 7% odd. They came in at 14%. India was up 9.4% year on year. API was up around 46.5% on a year-on-year basis. The other operating income was aided by income from the PLI scheme as well, which is to the tune of around 59 odd crores. What stood out were the margins, which were at a multi-quarter high. So that came in at 13% versus 6.9% on a year-on-year basis, and versus estimates of around 12% and versus 12.3% in the previous quarter. So there was an improvement which came in on margins, and the company has indicated that the FY24 margins would be north of 15%. North America, which is a market which is tracked very closely, delivered sales of around $175 million. The range was wide, anywhere between $175 to $190 million. But the company said that the US was in line with the guidance provided. The price erosion has probably bottomed out. It was in low single digits this quarter. Now, Spiriva generic is an inhaler drug that the market is watching quite closely in terms of a launch for Lupin. The target action date, which is when the US FDA is expected to reply on this drug, was expected between April and August. The company has indicated there was a lot of back and forth with the US FDA with regards to this particular drug. They will be ready to launch Spiriva generic if they get approval. The target action date now stands anywhere between July and August. They have not been given an indication about a possible inspection for this particular approval. Remediation of plants, they have undertaken remediation of the Tarapur, Pitampur and Mandideep facilities at this point in time. So that would be another trigger to watch going forward.
Okay, thanks for that. Well, Latent View slumped over 10% after the company reported a weak set of numbers. The company's revenue is up nearly 20% at 140 crores. On a yearly basis. However, the company's EBITDA dropped by 30%. Rima joins in with more details on that. Rima.
Thanks so much for that. So the miss in Latent View analytics numbers is on the margin front. If you pull up a track record of the company's margins, you would see on an average, it hovers between 29 to 30%, plus or minus a couple of percentage points. But this time, margins have come in at 21.4%. So sharply lower on a quarter-on-quarter and on a year-on-year basis. There are three key reasons for the decline in margins. One, the company upped their hiring, especially go-to-market. So there was an increased payroll cost. Two, the company organized 4 events and participated in 3 industry events, which led to an increase in operating expenses. And third, the company was expecting some follow-on projects and orders post the completion of their work in Q3, which didn't materialize, and it pushed out the revenues. And that's why Q4 revenues were perhaps slightly lower than what the street was anticipating. So that's the reason why, even on a year-on-year basis, if you look at the revenue growth, it's 20% this time, which appears to be healthy. But if you compare it with the past couple of quarters, the revenue growth has been on the lower side. Back to you.
Thanks a lot for that, Rima. Well, moving on, Nazara Tech tumbled close to 4%. Nitish Mithasen of Nazara Tech says the company will try to enhance its margins in FY24 and will not achieve margin targets at the cost of growth. He also expects 20% margins from the gaming business in the longer run. Take a look.
We usually guide only in September of the year. Since we listed in the last 2 years. So I don't have a particular guidance for FY24. We'll always try and enhance EBITDA margins, and we will attempt to do so in FY24, but not at the cost of revenue growth or strategy growth, I would say. So I do feel that we should be able to increase EBITDA margins this year. But again, we will prioritize our growth. And if we get strategic opportunities to grow, then we will, also sacrifice margins in that extent, but we are also very clear that we will maintain profitable growth in the company. I think gaming in general should be a 20% plus margin in the long run. And therefore, that's what we will chase over the next few years, I would say. In the short term, in FY24, I think, again, I don't want to give specific guidance, but slightly higher margins than where we are is what we will try and achieve.
Okay, staying with earnings, Shipping Corporation of India surged over 6% on the back of a big jump in net profits, and the company's margins also jumped over 40% on a year-on-year basis. Mangalam is here with the key highlights. Mangalam.
Well, the beauty about the shipping industry is when things don't work, there are things that work as well. So it's the diversification that works for them. This time around, it's the tanker segment that worked for Shipping Corporation of India at a time when the dry bulk index is lower and they're losing some money in the liner segment as well. So just to run you through the numbers, a revenue growth of just 8% led to an EBITDA jump of 42%. That meant margins expanded from 25% to about 33%. Add to that some tax credit and you have a big boost on the net profit from 148 odd crores to 380 crores. So that's a near 150% jump on the bottom line. About the segments that did not work, we saw the liner segment where the revenues dipped by almost 60%, and we saw that the operational performance turned into a loss from 180 odd crores to a loss of 62 crores. And then even the bulk business saw a revenue decline of 39%, and out there to near 106 crore worth EBIT was eroded in this quarter. But then the big delta was the tanker business, where the revenues grew by 82%, nearly doubled. And at the same time, the operational performance out there turned from 115 crore EBIT loss to about a 310 crore EBIT gain. So that's a delta of nearly 425 odd crores coming in. Add to all these things, they will soon, demerge and relist their land assets. So that's a trigger. The other eventual important trigger for Shipping Corporation of India, just like it is for most of the PSUs, is privatization. Shipping Corp more so than the others.
Thanks a lot for that, Mangalam. The fifth headline today, Aarti Industries slumped close to 9% after Nirmal Bang downgraded the stock to a sell rating and has cut its target to 430 rupees per share. Even other brokerages have put their view on the stock. Sonal is here with the key highlights. Sonal.
It is, and that is because of weak set of numbers, and also the commentary did not inspire any confidence as far as future outlook is concerned. It was a miss on all parameters in Q4, and on the back of this, Kotak Institutional Equity says that they are lowering their EPS estimates. Miss was due to maintenance shutdown and also subdued demand from discretionary sectors, which is around 50% of Aarti Industries revenues. The FY24 EBITDA guidance of 15% by the company is also below the analyst expectations, and that is something that they do not like. They have trimmed their FY24, FY25 EPS by 1 to 6%, and for FY25 as well, Kotak Institutional Equities is estimating EBITDA a little over 1600 crore rupees, which was around 1650 crore rupees earlier. So they are trimming their expectations across the board. Centrum says that Q4 performance was muted, EBITDA was 9% lower than their estimates, and margins were also impacted owing to sales to non-regular markets, which led to lower margins for the company. Management has guided for 25% volume growth, while 15% EBITDA growth, which is again lower than expectations. They have lowered their FY25 EBITDA estimates by 2 to 5% and earnings estimates by 6 to 8% for the next 2 financial years. Nirmal Bang has gone ahead, downgraded the stock to a sell, cut their target price to 430 versus 500 earlier. FY24, which was earlier expected to be strong, is expected to be under pressure now, mainly due to demand slowdown in the developed markets. Also, exposure to discretionary categories, it remains high at 50%. So global recovery in these sectors is very important, and if that doesn't happen, pressure could continue as far as Aarti Industries is concerned.
Okay, thanks for that. In more brokerage views, while Henderson Bank climbed close to 3% after UBS upgrades the stock to a buy, they have raised their target price to 1450 rupees. Versus the previous target of 1250. Abhishek joins in with more on that. Abhishek.
While UBS has upgraded the stock to buy from neutral, they have increased the target price to 1450 per share from earlier target price of 1250 per share. So they say that benign corporate credit cycle and peaking of interest rate is favorable for Henderson Bank. So stable corporate CV, that is commercial vehicle, and the MFI portfolio cycle is actually supporting the operating metrics this time around. They believe that Henderson Bank has high PPOP to assets ratio. PPOP is the operating profit. That ratio for Henderson stands at about 3.4% for FY24-25, which is higher than the private peers that they have between 2.7% to 3.2%. And this could translate to higher ROA 2% for FY24 and 1.9% for FY25 is as per UBS estimate, driven by the declining credit cost that they expect. So the stock is trading at about 1.4 times price to book value of FY24, which is lower than the 5-year historical average in terms of the valuations that Henderson Bank has seen. Back to you.
Well, CNBC-TV18 News break is confirmed. JSW Infra has filed IPO papers with market regulator SEBI for a 2,800 crore rupee issue. Ritu is here with all the details. Ritu.
You know, this is the first IPO coming from the JSW Group in more than a decade, so a significant one to watch out for. As we reported earlier today, JSW Infrastructure, which is the ports business of the JSW Group, has filed the DRHP for its initial public offering with SEBI as of the 9th of May. It plans to raise up to 2,800 crore rupees through the IPO route and will deploy these funds to retire its debt and also to fund its capacity expansion projects. As far as the debt is concerned, the net debt stood at about 2,875 crores, which was the last figure that we have. The JSW Infrastructure IPO is actually the third public listing by the group, and it follows 13 years after the public listing of JSW Energy, which was in January of 2010. Now, JSW Infrastructure promoters, we understand, will not be diluting their current stake in this IPO. JM Financial, Axis Capital, Credit Suisse, HSBC Securities, these are some of the book-running lead managers to this issue. Now, as of December 31st last year, JSW Infrastructure had an installed cargo handling capacity of more than 153 million tons per annum. And as part of their strategy, we understand that the company wants to further expand its asset portfolio and grow its operations by evaluating acquisition opportunities. And so this IPO is going to be critical. The equity shares of JSW Infrastructure are proposed to be listed both on the BSE and the NSE.
Thanks a lot for that. With that, it is a wrap on this edition of Markets Today. Thanks a lot for watching.